Good afternoon, everybody, and welcome to the half-year results for Redefine. I'm just going to take you through the introduction and the strategy. Andrew will take you through the financial, and David will take you through where we are in the portfolio and the property side. You're all quite familiar with who and what Redefine is, and our structure is unchanged from the year end. Total assets under management, 37.3 billion. That includes international, which we'll deal with separately. And our direct property portfolio, just under 20 billion, listed of 4.7 billion. So in terms of our strategy and objectives, this will give you some idea of the progress that we're making. Securing long-term growth and capital appreciation, still in progress, but we're making good progress. Focused property management to grow income and lower operating costs. Again, we're making good progress there. Strategic investments in listed securities to transform Redefine from a hybrid into a pure property play. I think you all know the initiative that we've taken in regard to Fountainhead. If it happens, we will be out of the high prop investment. Our management of local debt to lower the cost of funding, very good progress on all fronts there. Real growth in international markets, yeah, again, doing and exploit and identify and execute adding development and corporate opportunities. We certainly are making very good progress on that front. In essence, from a Redefine or any property company's point of view, there are four things we can do. Grow income, difficult in these times. Lower expenses, we're making some progress. Lower the cost of debt, we're making good progress. And then add value. The best investments we can make are into our existing properties. That's where we can get double-digit growth, and there's a big focus on that. So, Fountainhead acquisition, some of you have seen this before, and this is the rationale for the acquisition. It is, as we've said previously, subject to regulatory approval by the Financial Services Board and the Competition Commission. Those submissions are in the process of being made, and once we get those, and if we get those, then we'll be in a position to undertake a full due diligence into the underlying assets and formulate an offer which we believe will then be fair to Fountainhead shareholders as well as to Redefine shareholders. And of course, any offer that we make will be subject to the approval of both sets of shareholders. So it's a time process, and we will keep everybody posted of progress as it happens. Just to give you some idea of the improving the quality of the portfolio, this is the PEP Stores warehouse, which we've alluded to previously. It has just been handed over to PEP for beneficial occupation. It's enormous. The combined thing is just over 100,000 square meters, and our return is in double-digit figures. On this one, it's been brought in below budget. PEP have sent us one of the biggest developments that we've been involved in with the least hiccups. That's an email we got from Marius Barkhuizen from Pepcore Properties. It was a pleasure dealing with them, and I believe that they have the similar view from us. This one over here is one that we're now busy with. It's a site which we have an existing building in the south. Scania wanted some additional space and new space, which we had space on the site, and we're in the process of developing and redeveloping that for them. Again, we'll show double digits on the cost. 90 Grayston, we're about to go on site. This is the property right next to Investec. It's a little 4,000 square meter building, very old, and we are planning an 18,000 square meter development, which you can see on the right. It's on spec, but if we achieve the budgeted rentals, it should show about 9.5%. This one's quite impressive. This is the Alexander Forbes building opposite Sandton City. That's our proposal. There's a series of buildings. We're not going to do anything on this one until such time as either 90 Grayston is substantially pre-let, or we have a tenant to kickstart the building, but we will probably demolish the building in the course of this year. Essex Gardens, an office block in Durban. We had an inquiry from one of the major tenants, TBWA, for more space, and we've now completed a new office block, and we'll be upgrading and adding to the existing. This is Maynard Mall in Cape Town, where we've made substantial improvements, and we're now continuing with the second phase internally, and that's working very well. This one, Shoprite Para, quite amazing. This was a building which was deteriorating. We were going to sell it. We had an offer of about 75 or 80 million. We decided to see what we can do. We refurbished it. We put in a Chinatown, which opened about 2 weeks ago. It was just edge-to-edge people, still trading particularly well. Shoprite have exercised their option, and we're in the process of finalising a new lease with them at a higher rental. So again, this is going to be 11.5 to 12.5% return on the new money invested. Park Meadows, it's a property in Eastgate. If you see the comment there, we thank all Redefine staff for their complete participation in bringing this excellent site to fruition. Food Lovers Market opened about 3 or 3.5 weeks ago. We had this building is in 2 sections. The top section where Food Lovers are was very weak, and now we have an anomaly where you can't get parking on that section, and there is parking on the lower. So we're faced with the challenge now of having to provide additional parking on the site in order to cope with the number of people coming to it. That's really where we are in our strategy, other than to say we continue to look for acquisitions that will improve the quality of the portfolio. We continue to look for value-added opportunities. We're very happy with the half-year results and the progress we're making for the full year. And I think that as shareholders, the Arrowhead unbundling has proved successful. There were some skeptics. Glad to say that you were wrong and we were right. So without further ado, I'll ask Andrew to come up and take you through the financials. Andrew.